Alright, enough talk about bottoms. We're going to do topping patterns here. You can see this like scatter mess of tags I have. I'll explain that in a minute. What I'm going to do in this video is I'm going to go back and look at the Great Depression topping pattern, which is actually quite a common topping pattern. We saw this pattern when the Tesla bubble hit the top of its ribbon. We saw this topping pattern on the GameStop bubble. When it blew off, is this pattern. The Great Depression has this pattern, and I'm going to show you all the characteristics, and then I'll show you what they look like on this chart. So this should be a very cool episode. Also, we're getting green bars off of this low, so the crazy bears have to chill out a little bit more. As you know, I called this as the bottom here, and again here, and I think we're going to rally. And you'll see the lines I painted here and why I think so in a minute. Way more clearly than I explained in the previous episodes. You'll see the whole thing. So we go to the DJI, the Dow Jones Industrial, and then we teleport back in time to 1929. Okay, so check this out. This is so cool. And you know, this bubble is like 10 years, and these patterns are happening over weeks, whereas our bubble is whatever 60 years, and that these patterns are happening over months on our thing. But if you go look at GameStop, like this stuff all happened like over a week or two, which is really cool. But in any case, here's the general idea. I mean, you drive up the bubble, right, and then you get this first kind of cone shape, which everyone's pretty well aware of this cone shape on our chart, but this is what it looks like on the Great Depression. And you have basically, this would be Volmageddon on our chart. This is the 2018 crash on our chart. And then this is COVID, and this actually happens over a weekend on this chart. So I don't know if it was gonna throw a tail and we missed it over the weekend or not. The tail on our chart does not make it all the way down to the bottom cone. And on this one, it gets picked up sort of by this channel. But you can see the cone shape, right? And then you blow out of the top of the cone, and then you start bouncing downhill, and then you start expanding into this cone, right? Up, down, up to the top, and you're bouncing on top of the previous cone shape here, right? And you're expanding, and there's sort of a topping cone. And GameStop did this, and yeah, Tesla did this near the top. And you sort of, if you just kind of look at it, you sort of get this like sideways shape and a low, and then you get the top, right? And then you go lower than the sideways part, then you go higher than the sideways part. And that's just kind of the shape that you get. But if you look at it in terms of like a cone, it's just an expanding kind of cone shape, and then boom, you bounce to this high that's higher than this one, and then you're done. Goodbye. And this is crazy. This is the Great Depression, and it fell out like this, and GameStop did exactly this too, just off a cliff to the bottom part of the previous cone, right? And then the way that each of these charts are covered was completely different. Like Tesla did this, and then it rallied to a high. GameStop did this, and it came down, and then it bounced back up and just kind of stayed up. And the Great Depression, I mean, obviously, it did this, and then it went into a long bear market, which is pretty ugly. It went down for years after that. So if you do this topping pattern, it does not mean that you're going to go into like a 20-year bear market or something. But this pattern is a topping pattern. So this is a really cool topping pattern that is actually quite common. And yeah, it's two cones. And it actually happens a lot. So I'm going to go back and show you this first cone, right, and where we are. And we just jumped on top of, we're right here. We just jumped on top of the cone. We're right here. So let me jump back to the S&P, and let me draw this pattern out for you on the S&P, and I have tags. Like I can show you the exact targets-ish. I don't know the exact dates it might happen, but I have a pretty good idea. Because the last sort of pattern on my end this century, yeah, okay, the last pattern that you get sort of on this cone, like this whole pattern like the cone, the amount of time that passes in the first cone is roughly the same amount of time as the second one. So we know it's like a couple years or something like that. This is like 2.5 years, and this last jump here is about the size of the topping pattern, just for like a rough size guide when you're looking at the size of these things, right? But so you can see this cone here. This is Volmageddon. Same thing. You hop on the cone, right? Volmageddon. The 2018, you get the V bounce. And then COVID, don't make it quite to the low. We got picked up by this channel here. And rally, right? And then you go out the top. And then you come and you jump on top of the cone, right? So that's exactly what I just showed you on the Great Depression. But let me zoom in on this and get a little bit better chart, because this is awesome. And this is a high probability of happening because we're doing it. It's doing the shape of this thing right now. So, like I've been saying, I think we're at a bottom right here for like 20 different reasons. But this, I mean, is clearly a downtrend that we're supposed to jump off of if we're going to do this pattern. But you can see here, we've got this descending wedge, right, where we come into the cone. And then we've got one hop, right? And then you get a bigger hop top to bottom. And then you get a bigger hop top to where? Do we land on top of the previous cone, or do we stab through it? Not sure about this area. I don't know if it's supposed to bottom here, or if it's supposed to stab. It might do both. It might kind of coil here and just throw a dart, like a huge dart. That would be a cool thing to trade. But in any case, let's just call this the area that we're supposed to bounce off of. We can worry about that later, but that's it. You get the extending cone shape. So right now we're here, and this is the call. It's a rally to all-time highs, which I've been saying that for the past week or so anyways. But now you can see the whole pattern and why I'm calling for that. And check this out. Boom. We roll over, and this on GameStop on Tesla, this is a low. You always put in a low here before you rally to the top. So I expect this to come down at least below this point. I don't think it would stop here, actually. I expect you actually throw a dart down to this thing. It doesn't show that on the Great Depression chart, but it happened over a weekend. And then you rally to the top of the stock market. And this, I think, is the top of the everything bubble. The top of the market, and it's up here. I mean, if it happens around this date, March next year, it'll be around 66 on the S&P. And this shape is pretty good too. Like, these things get wider and wider and wider. So the timing on this is relative to the previous cone that we just did, and the size of this is relative to the previous cone. So these are pretty good estimates based on the general shape that these take. And we already have the whole cone shape painted because we've already hit down, up, down, up, down. We've already hit both sides multiple times. We have the shape of the whole thing. And then we have to deal with our channel. So when we're crossing our channel, we're going to get reactions in there. And it's not just going to be a smooth arc, you know. We're gonna run into the channel and coil and bounce and stuff. But this is the general shape of the thing. And then on the back side, you come down, and this, again, I'm not sure if we should be bouncing on top. Like the Great Depression bounced on top here. GameStop ripped lower than this when it came down to this thing, and it ripped and it slingshotted. It was absolutely absurd. Like, I was day trading it when it was happening. And then you go and you put a high that is higher than this and lower than this, like in here somewhere. Like in this area maybe. It's about the right height. And then you're gone. Goodbye. This is the last bull trap before you collapse. And that's the shape of the top of this thing. And it takes about 2 years to do it. And so if we're doing all this stuff for like 2 years, and we're getting rallies and crashes and rallies and crashes, this kind of corresponds with, here, let me go down. You crash down to the cone. So this lower cone, not including the COVID crash, the Volmageddon taps and the 2018 taps paint the downline. And you would come down to here. Through the yellow cone, down here, bang. And then you'll usually rally pretty hard, like probably back around here, and then double tap it, and then you can rally all the way back up kind of to here. Like the Great Depression came like all the way back up to this point, and that's where the bear market started. On the Great Depression, that's a bear market, but that's the topping pattern painted on the S&P, and it's right here with dates and tags. You know, July this year, right? So that's just a couple of months. Yeah, so this is just like a couple of months to top, put in a high and a low, a few more months, like 2 months up, 3 months down, right? And then we would be, October this year, we'd be ripping up to the top. March, April next year, we'd be topping out on the S&P about 66, and then you get this crazy volatile collapse topping pattern. And then, I don't know, like you roll out of here, we can worry about that later. So if you went into like a super deflationary thing, after this, you'd get like a Great Depression thing. If we go out into stagflation kind of crap, it's pretty much sideways. If you go out of this into the Tesla bubble, you put in a new high pretty fast. So this kind of thing's crazy. But I did want to, I guess, probably talk about the euro-dollar futures again. I pointed out this chart a couple of times. But this is what makes sense to me while that's all happening, right? Because that's in this whole zone here. I mean, I would think the interest rates would probably want to come back down to zero before we rally to the top of this thing, right? And then we'd be around zero while we're rallying to the top. And that would be just next year. So I think, let's see, to make the euro-dollar future chart match what I was just drawing there, this thing should actually turn over pretty soon. And we're going to rally now. Right, so interest rates should be coming down here while we're rallying. And then we'll flip over. And then you probably get like stimmy checks again next year. And this would drive back up. And then we go through a huge deflationary crash. Like this. I mean, interest rates are probably going to be wobbling back and forth between like 0 and 1% while this is happening, corresponding with those crazy movements. And then once we're done with all that stuff, I don't know. I mean, a huge deflationary move, we break out like to negative interest rates this way. If we go into stagflation, we're probably breaking out this way. But I've looked at, I mean, the Fed says they're going to raise interest rates 6 more times. I think that's a bunch of BS. I think we pretty much topped out on interest rates and we're going back to zero is what I think. And we're probably going to do it more than once, corresponding with that pattern if it plays out. But once we're done with all that stuff in 2 years, this way is deflationary, negative interest rates. This way is inflationary with higher interest rates. We'll probably break out of here eventually. I don't know. But this chart will tell you kind of which way we're going after that to determine that, if we go to negative interest rates, that's Great Depression looking stuff. If you go this way, that's probably more stagflationary. So, yeah, that's the sort of whole top and the whole thing. I don't know what to call this video. Not investment advice. Please click the like button. And I thought this would be a fun one. I've looked at historical charts a few times, but we're actually up here doing the historical thing right now. We're doing the top. And it looks just like this. This giant mess right here is what it looks like. But just to zoom in again on what we're doing right now and just show you again that I think we're hitting mega, I showed you this downtrend before, but I didn't paint it as the topping cone. But we're coming into the top of the previous cone top and the channel and the downtrend. It's a ridiculous amount of support. And yeah, and we have the top of the channel and the ascending cone meeting right here. Like it's a super obvious target. And that's at 50 July 22nd. Wait, 13th of July 22. Yeah, so that's not too far away. May, June, July, boom. Couple of months, we're going to be right here at all-time highs. Then people are going to be like, oh my god, we're going to infinity, and then boom, you're going to put in a lower low. Then everyone's going to sell their stuff, and then boom, you're going to the peak. And then everyone's all in, and then bang. another low, but probably not through the bottom. But I wonder if people will all be drawing this if it starts happening. Because what happens if everyone figures out the pattern? Like, it can't still happen, can it? But anyway, that's the general idea. I don't think there's much else. But yeah, in any case, this bottoming pattern is still looking good. We threw two tails on the downtrend, and we're printing a green candle before market now, Sunday night. So it looks completely good and normal. And I called the wrong tail. I called the first tail. There's two. And I think that's probably what we're going to get here before we rally. Just those two and just go. That's my call. And I'm mostly longer dated call options out to like January, kind of, which is just, I don't know. When I do call options, I try to do triple the length of time of the move I'm looking for, but I did near the money. I didn't get too crazy, just to make sure we do actually rally out of here. But this is the pattern I actually expect to happen, and it's the top of the everything bubble, and calling it early. But yeah, right now it's doing it, so we'll see if it keeps doing it. Pretty cool. What's happening? Bitcoin's trading. Let's look at Bitcoin, right? Gold's trading. Bitcoin's still just coiling. So, I mean, if the stock market rallies super hard for a couple of months, June 19th, like, we're running into this downtrend sooner than that on Bitcoin, and I don't know. Bitcoin and the stock market may not stay correlated, or Bitcoin might just break out right here and do. Everyone thinks Bitcoin's going to collapse. It's just going to go up. I'm not sure. Bitcoin, I don't want to trade Bitcoin right now. It's too crazy. Gold, I think gold likes the weak dollar, and it's rallying still pretty good. So this is a pretty good pattern on gold. Yeah. Gold, gold's supposed to do good in sort of an inflationary environment, but actually the macro stuff, I don't know. I think gold just likes the weak dollar, like the dollar sort of stopped parabolically ripping to the upside, and gold likes that right now. But gold is a tricky one. But I mean, you can see the dollar just like went freaking vertical and threw in a peak, so it'll probably chill out for a minute. I don't think we're going to keep ripping vertically on the dollar right now, especially correlating with a bounce. Dollar is probably going to chill. You have treasuries kind of reversing. Like, you can see a lot of stuff at critical points or reversing already. Yeah, I don't know. I'll look at, not this video, but I'll look at some stuff that I think is going to probably rally hard with this rally, and Workhorse is one that keeps popping up for different reasons. It's like it has short interest and it has a bullish chart, and I just keep every different video I make for different reasons, like Workhorse keeps popping up. So I think this is maybe my stock. Like, I'll become like a Workhorse fanboy or something if it rallies really hard here. But in any case, not investment advice, and hope you had a good weekend. And I'm flying to Mexico in the morning. I'll catch up with everyone from there. So have a good night. Cheers.